Welcome to this session. In this session, I am going to demonstrate the RiskSpotlight software solution, which is utilized by financial services firms to integrate and embed management of operational risks into the core first-line activities. So in terms of your introduction, I'm Manoj Kulwal. I am co-founder, chief risk officer here at RiskSpotlight, also joined by Simon Wilkins, who's the co-founder and CEO at RiskSpotlight. We've been in the business for 8 years, and we provide content, consulting, training, and software solution, mainly focused on operational risk management. So that's where sort of 85% of our business is on operational risk management and financial services. We do provide services on other topics like regulatory change management and information security management and so on, but bulk of the work is around operational risk management. Okay, so that's sort of a quick introduction of just Simon and me and the company. In terms of the solution overview, what I wanted to highlight, sort of the two core principles we have taken to design our solution was, first of all, to making sure that the solution makes it easy for you to integrate risk management into the first line activities. Because this is where, even though organizations have spent millions on defining the frameworks and processes and software, this is still a challenge for the industry. And this was one of the main reasons we decided to provide a solution, because even though there's like 1,000+ software vendors out there on risk management, they haven't focused as much on integrating risk management into the day-to-day core business activities. So that sort of was one of our main focus, that yes, we want the software to be helpful for the second line, but the main focus of the software is to make sure that it's easy for the first line, that whatever they're doing on the day-to-day basis, how can we make risk management as part of that day-to-day activity, so it's not like an additional burden on the activity. And then we had to make sure that whatever we do is simple and but also effective, and it's aligned with best practices, so that we're not just doing assessments for the sake of it, that there has to be some benefit in terms of doing assessments. We want to make sure that we're not asking the same questions 6 times to the first line users. So we're utilizing this information we already have, but also aligning it with best practices so that it doesn't take very long to then implement that software. And that's what we say, that for sort of tier 3, tier 4 organizations, we can complete the implementation in 4 weeks time. So from the point of taking the software, and if your framework and processes are aligned to those best practices, then it should be really quick for you to start using the software. With other software vendors, it requires like 6 weeks, 8 weeks, sometimes 15 months of configuration, because they don't come with those best practices as a starting point, and then you have to provide a lot of input to the software vendor in terms of what the software should do from an assessment perspective, what the software should do from an KRI perspective, incident perspective, and so on. And we said there is enough best practices already out there, so you should not have to do all that thinking. We want to bring all those best practices, so it's easier for you to then align your framework and processes to those best practices. And then you can demonstrate that to your risk committee, your board, your senior management, your internal audit team, and regulators, because they're always worried about whether the way we're doing it, is this the best way, or is there still room for improvement. So by making sure that you adopt those best practices, you can demonstrate that the way you're managing risk in your organization is aligned with those industry best practices. Okay, so those were the 2 core principles we used. Then here are the risk management capabilities we provide in the software. So of course we have all the bread and butter capability, like you can create a library of risk, you can have your control library, your policies, you can have your KRIs, incidents. So most of these are bread and butter functionality, which if you look at any of the 1,000 software vendors already out there, they will provide that capability. So I've just highlighted the ones which are unique to our solution, which you won't get in those 1,000 software which are already in the market out there. So one place where we are unique is the decision-making capability, where what we did was we've taken the best practices in terms of decision-making, decision analysis, and incorporated that into the solution. So your first line users, let's say when they were making an outsourcing decision, and as part of that outsourcing, they were considering a vendor in UK, a vendor in Poland, and a vendor in India, then each of those options, they come with their own set of operational risks. So you can then look at the risks associated with each of those decision alternatives, do your risk analysis, so you then make a risk-informed decision. And that sort of decision-making process is missing in all the current risk management software tools which are available in the market. So we went ahead and we've incorporated those best practices. Then we've also done a lot of work on scenarios where not only from a risk perspective, but also from a business perspective. So first line can then model to say that, okay, what if we go and acquire this company, then, what would our operational risk profile look like? Or what if 50% of our revenue starts coming from outside Europe in the next 5 years? What would our operational risks look like? So we've created a more comprehensive scenario capability, not just focused on risk and capital modeling, but more in terms of understanding the business, which is missing in the software vendors out there. And then we also created the solution to facilitate operational resilience management. So operational resilience is another big topic here in the UK. So we created the functionality which allows you to assess the resilience of your important business services. So you can then tell your board and senior management which of your services are resilient and not resilient at a given point in time. And another place where we've done a lot of work compared to the other software vendors is risk appetite. So normally risk appetite is like a PDF statement, sits on a SharePoint or some internal website. What we did was we've actually operationalized the risk appetite so that the first line users, when they're managing the risk as part of that risk management, they can see what the appetite for that given risk is and then stay within those appetite limits. Okay. So those are the 4 areas where I have highlighted where we are unique, and we provide that as part of the solution, and all the other topics like RCSA, control testing, so all the standard functionality you expect from any tool, we've got all that functionality also covered. So this is the risk management element, but we said, okay, that this is not enough. If this is all our solution provided, then we will not be able to address this challenge organizations are facing in terms of getting buy-in from the first line. So this is where we had to then extend the thinking and the scope of the solution to say that, okay, what is first line doing on the day-to-day basis? Because the first line users, they're not coming into the work to manage risks. They're not coming into the work to report incidents. They're coming into the work to achieve their objectives. They're coming into the work to execute certain processes. They're running certain projects. So if I go on the next slide, this is where we had to then extend the scope of the solution to include those topics of what the first line risk owners, the first line people are doing on the day-to-day basis. And this is where we created 3 elements. So there is the external element where, as things like Brexit, COVID-19, Trump elections, so those things are happening, then you want those business environment factors to be that you want to monitor that, you want to consider that and see if that impacts anything you're doing in your organization. You have your rules and regulations you need to comply with, and they may be changing in different countries where you're operating. You have your external stakeholders, mainly your customers, and you also have your third parties outside your organization. That those are the different aspects which can impact the way the first line is running the day-to-day operations. And then from the operational layer, we identified these are the different things first line is doing on the day-to-day basis, where they are providing their products and services through the different channels. So channels can be a retail bank branch, online banking, mobile banking. So through the different channels, they're providing those products and services to the outside world. And then to deliver that, we have various processes and we have various assets. So assets can be buildings, assets can be IT systems, assets can be information within those IT systems, that we need those assets to execute those processes so that we can continue to provide those business services and products to the outside world. But those processes and assets, they come with various constraints and vulnerabilities. So first line is then managing those constraints and vulnerabilities on the day-to-day basis to make sure those processes continue to operate, those assets continue to operate. Then the first line may be executing various operational projects. They may be making various operational decisions. And then of course you have various stakeholders in the front office, back office, middle office, who all need to coordinate to make sure this whole operational layer continues to function. And then you may have various business policies, which then provide guidance, to what you expect on various business related topics. So what we had to do was we had to extend the solution to include all of these elements. So now in our software, we have all of this capability where you can use the software to create a list of your third parties and then manage the risks associated with those third parties. Or you can list all your products and then manage the risks associated with those products. Or you can document all your processes and then manage the risks associated with those processes. Because just providing risk was not enough, because we had to provide what the first line is doing into the solution. And then we also had to then answer the so what question. So why are we doing all of this? Why are we managing all of these risks? Why are we making sure these processes continue to operate? And that's where the third strategic layer comes in, that we're doing all of this work to ensure that the strategy of our organization is successfully executed. And then whatever business objectives you've set out in terms of increasing market share, increasing revenue, increasing customer, we are able to achieve those objectives. Because if you're doing everything right from a risk management perspective, but from a business perspective, we're not able to achieve our strategy successfully, achieve our objectives successfully, then still something is not right in terms of how we are running the organization. So that's why we had to bring that layer to make sure that there is a context that when you escalate a certain risk and say, okay, this risk is important for us, the board will immediately ask the question, why? And then we need to be able to show that, okay, this risk is important because if we don't invest more on this risk, we will not be able to achieve this part of our strategy, or we will not be able to achieve this particular business objective. And that's where for board, talking about the business and talking about the risk then becomes one, because otherwise you are talking about business and then you talk about risk without any connections. And then it becomes very difficult to get the buy-in from the board on risk management related topics. So we had to then extend the scope of the solution to cover that. And then of course, yeah, risk appetite is what you are defining to say that, okay, what risks as an organization you're willing to take in order to achieve your strategy and objectives. So there is a very tight connection between strategy objectives and your risk appetite. And there may be some strategic decisions you are taking and strategic change programs you may be running, which of course then impacts one or more of those operational layers, and then it can impact the risks you are taking. Okay. So this is where we had to make sure that for our solution to be comprehensive, we could not just focus on the risk management part. We had to focus on how can we help you run your business better and use risk management as the tool to run your business better. And then there is quite a lot here, but of course you don't have to use all of this from day one. So we have customers who just start with third party. So they say, okay, I just want to manage my third party risk. So I will just take the solution and start by capturing all my third parties and the risks associated with that third parties and just manage those risks. Some customers say, I just want to start with processes. And then they create a list of all their processes. They manage the risks around that. Some customers say, I just want my IT system, my IT risks to be managed, and then they, in the assets, they then define the key IT systems and they just manage the risks around that. So even though, yeah, I'm showing you all of this, it's not compulsory for you to use all of this from day one. But what we wanted to do was we wanted to be comprehensive. So you know that once you buy the solution, you can extend the solution in a lot of different directions. You won't have to go and buy a new tool for third-party risk management, another tool for process risk management, another tool for IT risk management. That one tool allows you to manage any type of risk you could have in your organization, but in an integrated way where you're not just managing risk in a silo, you're managing risk in context of what the first line is doing on the day-to-day basis. Okay. So that's what sort of is different, that this is where, yeah, the 1,000+ software out there, this is where what they're missing, that they're covering a risk register, control register, RCSA, but they're not covering the context of what the first line is doing. And that's what was very important for us, that we covered that, because without that, you will never get the buy-in from the first line in terms of your risk management processes, your risk management activities. Then a couple more slides and then I'll jump into the solution. So here are the different areas on which you can use the solution for. So you can use it for operational resilience, where we've incorporated the Basel operational resilience requirement, the UK FCA PRA operational resilience requirement. So you can then meet all those requirements through the same solution. So you're just buying one solution and then you're just using it for these 6 different purposes, where you can just use it for operational risk management, or you can use it for enterprise risk management if you want to use it for operational, strategic, reputational, and other areas. If you want to use it to just manage your business, so you just want to look at your business objectives and manage the risks associated with those business objectives, then you can do that. Or you can just use it for third-party risk management, conduct risk management, or any combination of these 6 topics. So these are the 6 common areas where customers then start using the solution, but then they extend. But you only have to buy one solution. You don't have to buy 6 different solutions. And then last slide before I jump into the demo is why are we calling this as a solution? So because we're giving more than just the software. So the first thing we're giving you is we're giving you all those best practices that they already incorporated into the software from day one, so that we're not going to come and ask you, okay, how do you do risk assessments or how do you capture incidents? We'll start with those best practices, then we look at what you do at the moment, and then try and align you with those best practices. So we don't come from a blank sheet of paper on day one. Then everything is hosted on the cloud. So this is a software as a service, so that minimizes the cost of ownership. Then we provide a library of 126 operational risks. So if you needed help to build that library, then you can buy that as an option, and all that content gets integrated in the solution. We also provide a service for operational risk horizon scanning, which provides daily content on what are the emerging topic, what are the loss incidents which are happening across the different operational risks. So that can also be integrated as part of the software. And then we can provide consulting services in terms of the implementation, getting you up to speed, both from a technology perspective, but also if you needed help on framework perspective, change management perspective, then we also provide those consulting services. We can also create online training courses for your users. So when you're rolling out the software, you'll have to train your users on how to use the software. So we have the infrastructure to create those video courses, so it becomes easier for your users to get trained on how to use the software. And then we can also provide administrative support, where a consultant will work with your team to ensure that the returns on your investment you've made on the software is maximized. So they can keep eye on how many users are actively using the software, how many users are not using the software, is the quality of the data starting to deteriorate in the software. So they can be sort of your eyes and ears on how the software is being used inside your organization, and then support you in case they start to see any issues. And their objective would be to maximize the benefits you get out of the solution. All right, so then let's jump into the solution so you can see all the great things I've been talking about. So in this case, if I log into the solution, and like I was demonstrating on the PowerPoint slide, that there are various starting points. So depending on who I am in the first line, I may be interested in different aspects. So in this case, I have gone into Op Risk Management tab, because I want that to be the starting point for this user. But for another user, they may be interested in Enterprise Risk Management, where they want to look at more than just operational risk. Or for another user, they may be interested in the business objectives of their business unit and how they are doing, and then they can click on the Business Performance Management tab. So depending on who you are in the organization, we've got 15 different starting points. So if somebody was just interested in process, they can have that process risk management as the starting point. Somebody interested in project, they can have project risk management as the starting point. So that's what you can configure depending on the users you set up in the system, on where they are in the organization and what is the first thing they want to see when they come into the solution. So in this case, for this user, I've configured Op Risk Management, where I see on the Op Risk Management tab, the various links. So if I just wanted to go into the risk library, I can click on risks and then just go and see what my risk register, my risk profile looks like. Or if I want to go and see the incidents, I can click on incidents, and then I can just go and see what are the recent incidents which have been captured in the system. So all of these are quick links. These are just starting points depending on where you want to jump into the solution. And then on each of the tabs, we have configured a dashboard. So you can always then see like an executive view of how that your part of the business is looking at a given point in time. So in this case, on this dashboard, we've got 9 sort of graphs, which then give you an overview of how your operational risk profile is looking at a given point in time. And this will vary depending on which user logs in. So if you have, let's say, a retail banking business and a commercial banking business, then when the retail banking user logs in, they will only see the risks related to retail banking. And when commercial banking user log in, they will only see the risks related to commercial banking. So there is comprehensive security. So you only get to see the content for your business unit and not the whole organization. But if you are in the second line, then of course, yeah, you will be able to see all the data for all the business units. So in this case, we've given sort of 9 different charts, which give you a different perspective in terms of your risk radar status, which is like the escalation, which risks have been escalated to the board, which risks have not been escalated to the board. Then you see from a risk exposure perspective, how the different risks are, from a priority perspective, from the response perspective, so which risks we are accepting, which risks we are mitigating. Then you have the risks across, the different risk categories, risks across the different influence, frequency, and impact type. So you can see if there are any issues in terms of any risks from the dashboard. And then if you want to drill down, so I want to look at these 6 risks, which are my high exposure risk based on the risk assessment which has been done, then I can click on that, drill down, and then I'll be able to see what those 6 risks are. And then I get to see a little bit more data about those risks in terms of their control effectiveness, their response value, which business unit do they belong to. And then I can click on a specific risk, so theft of customer data, and then I get to see all the details around that one particular risk. So I can start with that executive view and then drill down to get to a specific risk where I get to see all the details. Okay, so that functionality is then standard across those 15 dashboards that, yeah, if you start with the third-party risk management, you'll get a dashboard, and then you can drill down and then get to a particular third party if you want to just see detail about a particular third party very easily. So in terms of looking at a particular risk, so let's drill down into the risk profile. So this is where you have the risk profile. So I can see there are 30 risks right now in the risk profile, and then, yeah, all of these columns can be configured. So we've out of the box decided that, okay, these are some of the most important columns you would want to see about a given risk. But of course, if you want to change that, then all that is very easy to change. So let me open the first risk, the theft of customer data by cyber criminals. So we can see what level of details we allow you to manage on a given risk. So in this case, we've divided the information across the different tabs, because depending on what you wanted to do with the risk, then you can go to the right tabs on the top and then just look at that aspect of this particular risk. So here we have, yeah, theft of customer data risk. You've got the description. We allow you a way to prioritize those risks. We give you sort of, yeah, a text box where you can say, okay, what is some of the important things we need to consider in context of managing this risk? How much influence do we have over this risk? Because for things like pandemic, terrorist attack, natural disaster related risk, your level of influence would be very low in terms of trying to prevent that. But things like bribery and conduct and your IT system failure, you will have a very high level of influence on those type of risks. So you can use that field, to easily separate out the risks. So you can then easily see which risks you have a big amount of influence on and which risks you may not have that much influence. So you just need to then make sure there's enough business continuity and recovery controls in place if you're not able to prevent or influence the likelihood of those risks. Then we've got sort of, yeah, flags in terms of whether to include those in reports. We've got this concept of executive and coordination owner. So executive owner is then the senior executive who's accountable for this risk. to the regulators, to the senior management perspective, and in UK from an SMCR perspective. But the coordination owner is then actually managing the risk on the day-to-day basis. So they are the one, if you need to know how that risk is being managed, then you would go to the coordination owner. But if you want a budget to, let's say, invest £50,000 or euros for implementing new controls, then you will have to go to the executive owner, because they then are accountable. They normally will have the budgets to allocate if more investment was needed to improve management of a certain risk. So we've separated that accountability and the day-to-day ownership of the risk. Then you can assign it to a specific business unit. So this is where you can then, when you're creating a risk, you can say, okay, this risk is in the commercial banking business unit, retail banking business unit. So you can select that. And then you can assign the risk to a particular risk category, which will then allow you to see all the risks related to external fraud, internal fraud, and so on. Then we use the bow tie concept. So in this case, we extended the cause functionality around the risk. So in most of the risk management software, when you look at the causes, it'll just be like a one text box. And that is not enough, because causes is where all the proactive risk management happens. So if you want to reduce the likelihood of a risk, then you need to really understand the causes of those risks in detail. And in operational risk, we do that when an incident happens, but we don't do that enough when we want to assess our risk or when we want to understand the risk. So that's why we've incorporated more functionality around causes, where you can identify all the key causes which will influence the likelihood of those risks. And then, of course, as an organization, you will not have an influence on some of the causes. So for example, there are lots of easy tools now available for cyber criminals, where they can hire a ransomware attack software, at a very cost-effective price. So this is one of the causes of why the number of ransomware attacks are going up. But as an organization, you don't have a lot of influence on that. You can't have any preventative controls for that. But there are other causes, like using IT hardware and software with security vulnerabilities. You definitely have a lot of influence on that. So that's where then you have to make sure there are controls in place to manage the causes which are under your influence, but you're also aware of other causes where you may not have a lot of influence, because those are the causes where you can then have some key risk indicators and see if using the key risk indicators, we can get some early warning sign around those causes. So this is where we see a lot of the proactive risk management will happen around these causes. And if you don't look at those causes, then the risk understanding, may be incomplete within an organization. And then you have the impact analysis to say that, okay, if we were not able to prevent that risk from crystallizing or materializing, then here are the impacts we may have to deal with. So we may have to pay cost of recovery, we may have to pay compensation. And as part of your risk assessment, you can then try to quantify those impacts. Okay. So this is where we see the understanding of the risk would be around understanding the causes and understanding the impacts. Then if I go on the top, then in the business management tab is how you connect this risk to everything the first line is doing. So in this case, we're saying that we're connecting this risk to this business objective, where our retail bank has this business objective where they want to increase the new customers they get by 12%. Well, if there were a lot of data breach incidents which start happening and they get reported in the media, we're not going to have many new customers who would be trusting us, to protect the data, and we will not see the increment we are expecting. So there is a direct connection between the data breach risk and this particular business objective. Similarly, there is a connection in terms of customer churn, that if a lot of data breach incidents start to happen, they're reported in the media, then existing customers may also leave us. And then this business objective we have of customer churn below 8%, we will not be able to achieve that objective. So this is where we try to connect, why is this risk important for the business? So that the first line, then can see the connection between why they need to make sure they're managing this risk appropriately. And then all the elements which you saw on the PowerPoint slide are highlighted here, where you can then map certain stakeholders, you can map your business services, you can map certain products, channels, processes. So all those aspects you saw on the PowerPoint slide, they are here. But of course, you don't have to use all of those on day one. So from the day one, if you just wanted to map processes, then we will just enable the processes. We'll hide everything else on this particular screen, and then you just unhide them as and when you are ready. Okay. But from a comprehensiveness perspective, you know that, yeah, all of those elements of what the first line is actually doing to run the business on the day-to-day basis, I want my risk now to be connected to those pieces so that the first line can see why it's important for them to manage that particular risk. Then I have the risk appetite element. So this is where now I can connect a risk to which part of the risk appetite it may breach if we don't manage this risk effectively. So if I just click on select, this is where you'll be able to see that in the background, we have defined these different appetite statements. So we are saying that, you know, we have zero tolerance for intentionally mis-selling products and services to customers by our sales team. So if I was creating a mis-selling related risk, then I can attach that particular appetite statement to that particular risk. So this is what we call by operationalizing the risk appetite, that you can convert your risk appetite statement into these individual statements and then map them to the respective risks, so that if I open any risk, I'm able to see which part of my appetite framework that risk is related to. Then you have the risk treatment. So this is where you are able to see everything we're doing at the moment to manage this risk. So in this case, we have 4 controls to manage this particular risk and what the effectiveness of that control is. And if I just open one of these controls, so this is where you have the assessment functionality, where you can assess the controls here from the design and operational effectiveness perspective. And you can also test the controls. So if you wanted to test, then this is where you can define the testing procedure and then perform the test. So you can see the tests performed on that control, whatever in the last 3 months, 6 months, and so on. Okay, so you can see the controls we have in place and whether they are effective. Then you can do an assessment of the overall environment. So while you can assess the controls individually, if I have 4 controls, I can also assess whether collectively is that control environment effective from a design and operational effectiveness perspective. So that's what this control environment assessment is. Then if there is any one-off actions we are currently taking in terms of helping improve the management of this particular risk, then I can also track those actions here, and as and when those actions then get completed, then it should, you know, improve the way in which we are managing this particular risk. And then you have your insurance policies where you can, so in this case, it's a cyber risk. So if you bought any cyber insurance policy, then you can also map that. So you're then able to see all the controls, the actions, the insurance policies you have in place, and then any business policy you have in place, which also is relevant for that risk. So in this case, it's the group information security policy. Okay. And in this last section is where you're able to see the best practices. So this is coming from our Horizon Scanning content service, where if you subscribe to that, so that's also an additional element that if you purchase that, then what we do is we track articles on a daily basis. And if that news article contains an example or content on best practices for managing a particular risk, then we flag those articles, and we are now only showing the news articles published recently where those articles had some best practice covered around managing the cyber risk. So in this case, because we're looking at the cyber risk, you'll only see the news articles related to cyber risk. And in this case, we see, okay, how Standard Chartered approaches cybersecurity. So you can click on that article, and then you can read that article to see if, you know, there are any examples of controls in that article which might help in your organization. And if that is helpful, then it's a good way for you to learn and keep an eye on how other organizations may be managing or coming up with their new approaches or new controls to manage that particular risk. Okay, so that's what that best practice section will always give you, and this content will get updated every day. So you can, you know, sort of keep an eye on those and utilize that to continuously improve your control environment. Then in the failures and issues section, so that's where you will be able to see any issues we currently have, so any weaknesses we have in how we are managing this particular risk. And in the incident section is where you will be able to see any incidents which have been recorded and mapped to this particular risk. So in this case, we had this data breach on 24th of January where 80,000 customer records were stolen. So now you'll be able to see all the details around that particular incident from that risk screen itself. And then of course, yeah, you can also go and look at the incidents on their own. But in this case, yeah, it's already been mapped to that risk. So that's why you're able to see all the related incidents on the same screen. And another benefit of the horizon scanning software is that in this case, we also then will show you all the related external incidents. So this related incident section will show you your internal breaches, and then the external incident will show you all the data breaches which are happening then within the industry. So you can then keep an eye on those external incidents also and see if there's anything we can learn from those external incidents. And similarly, if you were looking at bribery risk, then it will show you incidents related to bribery. If you're looking at ATM fraud risk, then it will show you any external incidents related to ATM fraud. So this content will change depending on which risk you open in your risk profile. So that's the failures and the issues section. And then in the monitoring section is where you define your key risk indicators. So if I open the key risk indicator, so you can say that, yeah, in this case, it's the outcome of the quarterly hacking exercise we do, where we do white hacking to see, to test the effectiveness of our cybersecurity. And it's a quarterly indicator. And then you've defined sort of, yeah, what score you get from that hacking exercise will make the indicator red, amber, green. And then you're able to see that every time in Q1, when we did this indicator was green, it became amber in Q2, and then it's come back to green in Q3. So that's how you can then define key indicators related to this particular risk we're looking at, and then monitor those on a regular basis. And when they go amber or red, the software can then send an email alert to the risk owners so that they become aware of that and they investigate and find out what to do in response to those indicators becoming red or amber. And then this related news article section then will show all the articles related to this particular risk. So this is where if there are any emerging topics related to how to manage data breach, then you will also be able to see that in the monitoring tab. And then you have the laws and regulations. So in case, yeah, you also want to join forces and risk and compliance team wanted to work together, then you can also map that risk to specific regulations. So your compliance team can then look at all the risk data you have from a regulatory perspective. So in this case, we've mapped this to the UK Data Protection Act. If it was a money laundering risk, you would map it to money laundering or sanction related regulation. So you can also then look at your risk environment from a compliance perspective. There's also scenarios functionality where you can sort of develop a business and risk related scenarios, but because of shortage of time, I'm not going to drill down into that, but happy to show that to you if you want to see that in more detail in a follow-up conversation. And the last tab is the OpRisk library. So this is what I was referring to earlier, where if you buy that OpRisk library, then what you will be able to see in the solution is the best practice content we provide as part of the library. So in this case, we're looking at the data breach risk. So you'll be able to then see what are the different causes we have documented in our library, which you need to consider as part of managing data breach risk in your organization. Similarly, we have documented the financial impact, the reputational impact, and the business impact of a data breach risk. So now you need to think about these and see that you incorporate these as part of how you're managing the risk in your organization. So all of this is RiskSpotlight content. And then of course, you can update and adjust that to fit with how your organization is managing those specific risks. We also give you examples of controls. So in this case, we've given 132 controls from the various best practices around ISO 27000, COBIT, which are relevant for data breach related risks. So then you can look at which of these 132 controls you already have in place in your organization and which ones you don't. And then it becomes a decision to see, okay, the ones we have not implemented, do they make sense for our organization, or they're not that relevant for our organization? But at least you can compare the controls you have in place with these best practices to see how closely aligned you are with those best practices. And the last one is indicators, where we also give you then examples of key risk indicators you can monitor, which will then give you the early warning sign. So if you then want to track these indicators, you can then define them in the monitoring tab and then use the software to track and manage those indicators. But we give you examples of all the indicators which are relevant and can give you that early warning sign on that particular risk. And this content will change depending on which risk you were looking at. So if you open the bribery risk, then it'll show you the causes, impacts, controls, and KRIs for the bribery risk. So you're always able to see what is the external best practice around managing that particular risk. So let me show you the risk assessment. So the risk assessment functionality, if I scroll down here, then this is where in the related risk analysis is where we are providing, in this case, 7 most commonly used risk assessment methodology. So this is where, based on the experience we've had with customers, we've said that sometimes you may want to assess the risk in a very simple way of, let's say, just high, medium, low. So let's say if a product manager was thinking of launching a new product, but he's still not sure whether they're going to launch that new product or not. But as part of that initial thinking, if they wanted to just assess this data breach risk, then what they can do is they can use the simple risk assessment technique where they can just go and say that, okay, if we go ahead with this product launch in whatever 8 months, 12 months time, then here is the risk exposure we need to consider on this particular risk. So this is like the simplest risk assessment technique. Then another technique is just doing likelihood and impact, which is what is used on a lot of IT change projects. So if there was a project to, let's say, upgrade our core banking system, and as part of that, they wanted to assess the data breach risk, then they can include this data breach risk on the project, and then they can use this technique of just likelihood and impact to assess the risk in relation to that particular project. Yeah, but the most common technique is this one. The third one is what most organizations use, where you do a inherent analysis. So you do a likelihood inherent analysis, then you do your financial, you do your reputational, customers, employees, and so on. And then you get your overall inherent risk score. Then you do your control effectiveness, and then you do your residual assessment. So you can do your residual likelihood, your residual financial impact, and so on. So this is where most of the financial services organization, when they do the periodic RCSA, then this is the methodology used in most organizations. Okay, but we've got a library of other techniques also. So depending on how first line, because it is more for the benefit of the first line, because first line may be doing lots of things. They may be making an outsourcing decision. They may be making a system upgrade decision. They may be upgrading, from a legacy software to a new web-based software. They may be moving an in-house system onto the cloud. So depending on whatever the first line is doing, they should be able to look at the different operational risks from the risk library and select which risks are relevant for whatever changes they are planning to do. And then they can pick a range of techniques that if they wanted something, very simple, they can pick one of these simple techniques. But if it is a big decision, it involves multi-million-dollar type decision, then you want to pick a little bit more comprehensive technique. You don't want to go for the simple technique. But the idea is to provide those libraries so that the first line, we want to make it as easy as possible for the first line to assess the risk, that we can't just give them one risk assessment technique and they have to use that one risk assessment technique for all business situations, because that is where, then they will not assess the risk in some cases if there's only one technique available. So that's the risk assessment part. And then in terms of escalation, so this is where you can then, we've created this concept of risk radar, where you can then decide whether this risk needs to be escalated to the board level, or it just needs to be escalated to the business unit level. So if you say escalation to the board, then it'll get included into the board report. If you say escalation to the board not required, then it'll just be escalated at the business unit level. So those are the two types of escalations we are providing, just at the business unit level and then also at the board level. And then the risks which you don't have to escalate, you can just click on do not include on the radar, and then they won't get included in any of those reports. So that's one flag which decides which risks then get included in those reports. And then you can also have your appetite status to see whether that risk is within appetite or is it outside appetite. And if it's outside appetite, is it a minor breach where it's just on the borderline, or is it a major breach where it's way outside the risk appetite which has been defined for the organization? So you can then use this to then do a lot of reporting in terms of your risk committee, audit committee, board reports, that these flags are used for that type of escalation. And then the last one is the risk response. So this is where then you decide that based on the risk, the latest understanding we have of this risk, what are we doing to this risk at the moment? So are we accepting the current level of exposure? Do we need to mitigate? And if I was using the software for strategic or business risk management, then there will be some risks where I may want to increase the likelihood and impact of the risk, or you're sharing the risk or you're avoiding that particular risk. So all of those responses then can be provided depending on what the first line response is in terms of managing that particular risk. And I see there is one question, but just let me show the last report and then I will go and take that question. So of course, from a reporting perspective, we've got these dashboards. So there's 15 dashboards, from a third party, process, asset, op risk. So depending on which view you wanted to look at. But one report which is very useful from an escalation perspective is this risk radar report. So if I click on the risk radar report, this is where you can then look at your organization hierarchy. And if I want to click on just the retail bank, you will then be able to see which risks of retail bank right now have been marked as escalation to the board, and it requires some remediation action. So these are the 2 risks right now which have been marked as escalation. And then these are the 3 risks which have been marked as escalation to the board, but we don't want board to do anything about it. We just want the board to be aware of those risks. So they're just for monitoring purposes. And then you see the same from the business unit level to see which risks have been escalated at the business unit level from a remediation action perspective, and which risks have been escalated from a monitoring perspective. But so only the senior managers of that business unit then need to be aware of these risks. They are not significant enough to be escalated to the board. And then of course, there'll be some risks where they will both be escalated at the business unit level and at the board level. Then I am done with my content in terms of what I wanted to show. And I can then just highlight this element that this is one solution, but it can address all your needs. So our focus was not to build another risk management tool, because there were already 1,000 softwares out there which can help you manage your risk. Our focus was more on the first line, that how can we make it easy for the first line, because at the end of the day, they are the ones who need to manage the risk. And a lot of risk management software, they build the software for the second line and not for the first line. And then it becomes really difficult for first line when they use that software. So that was our key focus. So that's why you just need one solution, and it can then be utilized for all of these different purposes. And it's just your starting point, that what is your starting point? Do you want your starting point to be third-party risk management? So you can start there, and then you can do op risk, and then you can do operational resilience. So you can sort of uncover the elements as and when your business users are ready. But you should not need any software to manage risks in your day-to-day business. That this one software will cater for all the types of risks you need to manage as part of running your day-to-day business. That brings us to the end of this session. If you are interested in arranging a more detailed demo for your team, then please send an email to demo@riskspotlight.com. If you want to find more information about the solution, then you can visit www.riskspotlight.com/solution.